Last year, one of the hottest IPOs out there was Figma. And then it suddenly wasn't hot. It was no longer a darling, as some may call it.
And then SaaSpocalypse happened.
And it's been downhill from there. So today we're going to talk about what happened, what's changed, and what needs to change, I should say, for there to be a recovery for Figma. And we're going to do that with the help of our friends over at Fiscal.ai, who are the sponsor of today's video. You're going to see a number of charts from Fiscal in today's episode as we analyze Figma.
We'll zoom in on this high-level overview of Figma's valuation from Fiscal.ai, and you can see right off the bat, even after a pretty sizable decline in the stock, it is still trading for expected next 12-month free cash flow, about 75x expected next 12-month free cash flow. So still a hefty price tag. There are, of course, some effects of the IPO, a lot of new stock issuance that is distorting that valuation. This is why, at most, we're usually very cautious about purchasing even small positions in IPOs. But let's break it down a little bit further. We'll come back to Fiscal here in just a minute. Remember to check them out, fiscal.ai/CSI. You can get 15% off any paid plan.
Figma fits into this enterprise software part of the supply chain, one of the largest end markets in our supply chain. Figma is a popular software, but they do have a notable list of competitors. Adobe, of course, is one of the biggest. And if you remember, Adobe actually wanted to acquire Figma a few years ago. That didn't pan out. But Figma has a long list of other competitors as well. Some of the public ones that we have listed here, Microsoft and Wix, and then loads of private competitors.
If you're watching this video, you probably follow the software apocalypse. And, creative software in particular not only has yet to recover from SaaSpocalypse, unlike, let's say, at least the cybersecurity leaders, which we discussed back in early March, there is still a lot of doubt that these companies will have a really healthy future because of AI. Creative software, one of the easier, lower hanging pieces of fruit to be able to disrupt with AI. But what's interesting here, if you look at this long list of competitors, at least from an outside looking in perspective, these all may look like basically the same type of creative software. But a lot of these companies, while they overlap in some areas, for actual professional use cases in creative and design work, they all have some differentiated feature or slightly different use case. So we have it as a competitors list here, but it is really just a peer list, I would say, overall. AI is fantastic at bundling up a lot of these different features into one nice, convenient package. So that is ultimately perhaps the long-term risk, and what companies like Figma and Adobe need to prove over time, that not only are their customer relationships sticky, but they can also hold on to their profitability, or in Figma's case, grow their profitability in this new AI era that we're in.
So let's focus a little bit more on those financials. Nick, you mentioned Figma needs to grow their profitability. So let's review their financials from Q1 2026, ended in March of this year. Revenue came in at $333 million with a 46% year-over-year growth rate.
Right off the bat, I would say this is one of the better software earnings reports from Q1. This is fantastic.
And their net dollar retention rate, highest it's been in a number of years, 139%. But what does this metric even mean?
This metric measures existing customer spend. So ideally, you want it to be above 100% range. What that means is existing customers are adding seats, or in some way, maybe via AI credits, spending more with your software. So at 139%, that means existing customers last year that spent $1 on average are now spending $1.39. But within this metric, it is worth pointing out, if Figma's revenue grew 46% year over year in the last quarter, that means most of the growth came from existing customers, and new customer adds were a lower part of that revenue growth story. So something to bear in mind here, this net dollar retention rate, if it slows down, that means we're going to see a significant slowdown in revenue growth overall as well, since new customer acquisition has slowed up a bit.
We contributed to this percentage going down.
Yeah, I guess we did. That said, one more thing to add on this, though, at least in Q1, what this did prove was the argument that because of AI, companies would be able to reduce their number of seats and therefore revenue would decrease for companies like Figma. That story has not played out, at least not yet. It would appear that quite the opposite is happening for Figma. Their existing customers are increasing the number of seats or otherwise just average spend with Figma. But we'll again need to see how this pans out over time. One quarter is just merely a snapshot. So the risk is still there that as time goes on, customers maybe migrate more to AI and creative software takes it on the chin.
Let's take a look at their free cash flow. For Q1 2026, 89 million, 27% adjusted free cash flow margin. Back in Q1 2025, you can see a sizable increase in their free cash flow. They were at 94.6 million. That was pre-IPO, and then had 3 quarters of subsequent decrease because some of the effects of doing that IPO. But now they're scaling back up their free cash flow quite heftily. Very nice.
Now, you may be wondering what exactly is adjusted free cash flow. Well, here's a look at that breakdown. Figma basically is now at the point where it's reporting free cash flow and its adjusted free cash flow exactly the same. About 2 years ago, they were still receiving a bit of residual income and effects from the attempted merger that Adobe had made and subsequently had to give up on at the end of 2023. So that's where the adjustments to free cash flow were coming in the past. But now that's not a thing anymore. So you can see basically the metrics are the same. But more important than just free cash flow on its own, let's go back to fiscal.ai here and calculate free cash flow on a per share basis. Now, this is where, Kasey, you mentioned free cash flow down a bit because of effects of the IPO, elevated spending at the company. But on a per share basis is where you really are going to see the effects of any shareholder dilution. So free cash flow is down. There are more shares that have been issued, and you can see the effects are even more pronounced on a per share basis as a result.
To recap, we've talked about what happened to Figma after the IPO, what's going on currently in their financials. Now let's focus on what they need to do to get back to growth mode.
And the most basic of items here, you can see positive progress in this chart. On a quarterly basis, free cash flow on a per share basis does appear to have bottomed. We'll see if this lasts or if this is a temporary item.
Figma's in a good place in their balance sheet. They have over 1.6 billion in total cash and no debt. So one thing that they could do is make some acquisitions.
Yeah, that's right. And they did last year after IPO. They said that they were going to probably make some acquisitions to bolster their capabilities in design. Nothing significant has been announced in 2026. So you may wonder, actually, why was there this sequential decline? If free cash flow rebounded a bit in Q1 2026 and no acquisitions have been made, why then was there this slight sequential decrease in the cash on balance? More effects of the IPO, another reason why we are cautious with purchases if we make them at all, like we did with Figma the last couple of quarters. Associated with a lot of employee stock-based compensation are tax effects that the company also has to take care of. And that is always the case, especially with a software company that has a lot of employee SBC, and then there's an IPO. There are tax implications. There are taxes that need to be paid. And so this is what accounts for that slight quarter-over-quarter decrease in cash on balance, even though free cash flow rebounded to that 89 million. You can see there on this chart, negative 116 million in taxes paid related to settlement of equity awards, specifically RSUs. So for what it's worth, that's why you saw the decrease in cash. Nevertheless, as you said, Kasey, they do have a nice little war chest available to them to perhaps go out and make some more acquisitions of smaller peers.
Let's round this out by taking a look at the guidance for the next quarter, Q2 2026. Revenue 349 million at the midpoint would imply a 40% year-over-year revenue growth in Q2 and 35% year-over-year growth for the fiscal year. Fiscal year, they expect just over 1.42 billion at the midpoint.
So the growth rate, definitely not the problem at this point. It looks like revenue is still on a good trajectory through the end of the year. Here's another fiscal revenue chart where you can see the general Wall Street analyst expectations over the next 3 quarters for sales that ultimately just add up to Figma's revenue at the midpoint that Kasey just mentioned. So no real surprises here, but you can see the positive trajectory. And so to round this out, what really needs to happen at Figma, it appears Q1 2026 and the guidance for full year 2026 proved that revenue can sustain a high rate of growth, at least for this year. Now, the real question is going to turn to profitability, especially as Figma approaches lapping the 1-year anniversary of their IPO later this summer. Can we see a more significant ramp up in their profit margin as they lap that 1-year anniversary? That is going to be the key test now as we enter the next phase of SaaSpocalypse Figma edition. So we'll be looking at that. You can track all of this at fiscal.ai/CSI, gets you that 15% off. And we'll continue tracking our software holdings as well and making sure they're not just growing, but also growing efficiently as they face AI disruption.
We recently did a video on the software API layer. Can I say that?
Sure.
I think it's helpful if I say layer, so I'm going to say it.
I think we should probably put layer in every single video title as well.
Yeah, Google, you're reading this transcript right now. I've mentioned layer multiple times, but watch this video right now talking about that software API layer, Twilio and Bandwidth, companies that we haven't covered here on ShipStock Investor before in a video form. Check it out right now.